Hey, everybody. Welcome back to this episode of Derek Invest, the market mentality. We are here with Kenny Coinz of Marathon Money Plus podcast. Let me put that up for him. I met Kenny just a little while back. I've done his show a few times. I thought I'd flip the tables on him and make him answer some questions today. So for all you out there, there's the QR code. Check out Marathon Money Plus. I did an episode yesterday. It's up. It's up on YouTube. Don't miss it. Get over there. Thanks for coming, Kenny. What would you like to add to that?
Man, hey, it's awesome being on your show. I really appreciate it. Marathon Money's been around for 9 years. We have a lot of listeners. I really enjoy having a conversation with Derek, and it's been fun. We're from the same industry, stock market, Wall Street. Used to be a professional trader, so I can't wait to enjoy being on here.
Cool,
But
cool. Well,
man,
Kenny, so we were just having an interesting conversation before I started recording that I want to get back to because you're a wealth of knowledge on it. Like you said, I mean, I know you're from finance, I'm from finance, and that's kind of how we got together. But honestly, when we were just talking about business and podcasts, you know a lot about this stuff. I mean, you keyed me in on something about YouTube that really it's funny. I mean, you mentioned Mr. Beast, you mentioned certain people that I knew, but I didn't know what you said. I want to revisit that. So everyone out there that's figuring out, if they're trying to put something together, maybe some of the keys. So like kind of just rehash real quickly what you were telling me about YouTube, how it kind of functions, and like what you've done with the Marathon Money podcast. Because I was kind of shocked. I didn't even know it worked that way. And I think it'd be cool for everyone to hear.
it's actually crazy because what I discovered about this August 2024 was I only had like 60 subscribers, and I was like, okay, you know what? I'm just going to just interview a lot of people and just throw stuff on YouTube. And slowly my subscribers started like climbing up.
Right.
Also, I'm on my own podcast. Hey guys, I'm doing YouTube now. I used to be audio. I still do audio. I'm just going on there, just throwing in. Subscribers started to climb up. And I watched this clip of Mr. Beast, and Mr. Beast says, like, your first 100, 200 videos, if you don't get any views, that's actually a good thing. You should be so consistent at throwing videos up, doing interviews, doing your thing that you love, that you shouldn't be worrying about the views. And I will this morning, Rich like doubled down on how accurate that is. There's this guy, Williamson. He does Modern Wisdom. He has 2,800 videos. You know what I mean? And like at
Yeah.
least his first four or 500 doesn't have anything. Now he's like, it's like now he's like eat everything every time he drops. He's 800,000 views, 900,000 views, a million views. It
That's
takes a
crazy.
long time, but you really got to do it. And over time, like you have to make a conscious effort to get better.
Right.
Like try to tweak something in every video. Just like the ticker thing on the bottom, add something, tweak something, make yourself better, clear vision, more structured podcast. But you also got to find out who you are. Like, don't make it too structured that you end up losing who you are. Like, if
Right.
you're more of a like go with the flow and you only need minimum like just bullet points, that's who you are. If you need
Yeah.
full script and stuff like that, and you're really good at that, and it sounds great to the audience, that's who you are.
Right.
But man, it's like, and learn how to transition that from people that come and view into subscribers. And there's certain things I'm not going to give away on here.
Right.
I'm giving to you off the podcast.
Sure,
But
sure.
yeah, but it's like I kind of like I'm a subscription service. I'm a content subscription service, and we've been doing the content subscription for 4 years. A ton of people sign up and pay for this, a lot. um and what made us do it is not because it was our idea, it was actually the audience's idea. Because before, man, I was a trader, so like I didn't need the money. So
Right.
people said like, oh man, you guys only do a 30 minutes once a week. And it was like, and I was like, I came up with an idea, let's do the website. And came up with Marathon Money Plus. We did an extra 30 minutes. And in that extra 30 minutes, we just gave out stocks. Just This is the stocks we're buying. We're buying this. We're buying that. We're doing this option play. We're doing that, and people loved it. And people paid for that. Now I'm doing a little bit more than that. I'm actually getting publicly traded CEOs on my podcast, and then people actually, the first time I did it, people actually loved it because you're invested in that company, and the chances you're going to hear from the CEO and I take questions from the audience. I do like a little marketing, and I say, hey, I'm having this guy on. Da 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 da. If you have any questions you want me to ask him on the show, I'll ask him. The first guy I had was Jim Prex. He answered about 25 of them. You know what I mean?
Wow.
He got to know about his backstory, he got to know about him and everything that he's doing, what they're going to do for 2025, what they're going to do in the next 3-5 years, clinical trials, all that stuff. A lot of time you're getting an analyst report.
Right.
You know what I mean? And
Yep.
then it's hard when because the analyst could be biased. Oh man, I think you should sell. He's got a sell view on this, or I got a buy view on this. But when you get it from the CEO and you get to learn his like, oh, this is how I lead. This is how I make my decisions. This is who my team are. This is the people I'm picking. This is what I'm going to accomplish the next year, because he's running the company. So
Right.
people are going to take his word more gravitate towards his words, because if he said this is what I'm looking to accomplish next year, that's what the plan they have in place. Accomplishing it
Right.
or not, these are his decisions.
Right. So you started off, so you're a trader, which I knew that. And so you started off basically, you were breaking down stocks, you were giving this information away, and it created this subscription service, right? So now you're going to take it to the next level and you're going to get to the actual like purveyor of the information of these companies. That makes a ton of sense to me. So a lot of things that come up in a lot of conversations, especially when you're starting with people who are just starting out and maybe don't understand money, Kenny. They always think what's holding them back is money. If I just had this amount of money, if I just had that amount of money, I would market this. I'd put this video everywhere, blah, blah, blah. What do you say to that? What do you say to the fact that so many people think they're held back because I don't have the marketing dollars? Like, I'm not Pepsi. What do you
I
say? What do you think?
we have used zero marketing dollars
Wow.
to grow to like over 1 million. Zero, like zero.
Wow.
Marketing ads are very inefficient unless you have a great ad. And the chance of
Okay.
you having a great ad, let's be honest, it's slim. You know
It's
what I
none.
mean?
It's a
It's
zero,
a
dude.
zero. It's a
It's a
zero. And it takes to have a great ad, it actually takes a team of 25 people. Like if you ever seen the show Mad Men,
Oh yeah.
it was yeah, they're an ad company, right?
Yep.
Look how hard they make it seem like it's easy, but look how hard it is to come up with a great ad. Look what they
Yeah.
had to do to make one great ad. It's a very difficult thing to do.
That's an interesting point you're making right there because I can tell you, and this is the truth. I thought the ads on all of the social media, I thought it was BS. I thought somehow they had programmed bots or something to get you your, like, if you're paying per click, and I'm
Yeah.
paying for 1,000 clicks. I swore it must have been bots that they just used for the ads because of their ineffectiveness, because they were so like it was a complete failure. I could do so much better on my own by just sending my content out to like different groups or communities or whatever. I legitimately believed that the advertising was fake, like truly, like, fake news straight up. I really believe that. And now what you just said has changed my opinion.
Yeah.
Because the fact of the matter was they were great ads, Kenny. It was
Yeah.
just me putting
Yeah.
something like some box. Hey, you should
Yeah.
da 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 da, which
Yeah.
everybody they just scroll
Yeah.
by.
Yeah. What you saw in growing up, like okay, 90s, early 2000s, is like those ads with the music and the dancing, the cereal box and all that stuff. And it's like uh um sock and pop it, like all those ads, those Pepsi ads, those takes teams to do. It takes a lot to come up with a catchphrase. It's like there's
Right.
very like ba da ba ba ba. It's like very few things that would stick for generations.
Yeah,
You know what
you're
I mean?
right. I mean, that's a
It's very hard. But what makes really things stick, and it's gonna come down to the same thing I've been saying: consistency. It's like I'm loving it. Got had to be said what 10, 10, 30, 40, 50. billions of times.
Oh my
That's
gosh.
you know what I'm saying. Like for example, the Walmart had the Walmart. Those things have to be said so many times before, and the same thing as consistency. Like your logo, your face, Marathon Money, Prometheus invest with Derek has to be said so many times and be
Right.
shown so many times because that's really what it is. You're
It's
you're
just repetition. So in your mind, it's just repetition, man. It's getting
yeah
it out there. It's repeating. Obviously, like you said, listen, everything you do in life, you have to try to step it up every single
yes
time. I always called it like you have to jump into the deep end of the pool
yep
constantly. You have
yep
to get into an area I can't swim there.
correct
Like that's how I always viewed it, right?
yeah
If I couldn't
correct.
swim, I was comfortable. I like when I can't swim. When I feel like I'm swimming, I get bored out of my mind. I do not enjoy it. So
Yeah.
there's another huge part. Well, okay, so let's circle the wagons back because you transitioned the show. You were a trader and you transitioned your show from trading advice and tips, whether it's stocks, options, whatever, into more of an interview platform where now it's all of these CEOs and maybe CFOs. I'm not sure.
Yeah. It's CEO, CFOs, COOs, people that can represent the company and give. See, it's still a trading
Show.
platform to tips, but I'm just going more in depth with talking to the actual companies.
So I was
You
going to
know what
ask
I
you,
mean?
so what's that like? Because going from a trader who's working off of charts to then going into like talking with a CEO about his vision of a company, this is like two completely different concepts. I know you know that as a trader, but if for those of you out there who
Fun,
don't know, that's
fundamentally, you can see what's coming. You know what I mean? Because if you get an idea what how the leader makes decisions, you're more likely to stick with the company. You know what I
right.
mean? Like people don't know why they keep buying Apple is because they know Tim Cook. A lot of these companies, their CEOs are not even known, so it's a lot easier to sell off that company.
Right. So do
If you,
you are you coming at it from more of a fundamental basis then than a
yeah, I'm
technical
coming at
basis?
a, I'm coming at a more fundamental basis and a technical because I can go in there and tell you, look, I just talked to the CEO, the chart is on an uptrend. I would wait for a pullback before I would get in, a clear sign of a pullback. When that pullback, when you see a bottom, jump right back in. The leadership, what they're going to be doing this year. The CEO said itself on the show, stuff like that. And then once you see those things happening, double down on the because what the rest of the market doesn't know, because they probably didn't watch the show. What's the rest of the market doesn't know? They don't know that, oh, okay, the first thing he said on the show is happening, so which that will lead to the second thing happening, and then that
Right.
makes it more likely for you to double down.
Oh, that makes a heck of a lot of sense. Right, right, right. That makes sense. Yeah, I mean, I guess I would definitely fall suit. I'm a big technical guy because I
Yeah,
don't get, I mean, I look at the fundamentals of the overall macro market all the time. But when
yeah,
it comes to a company itself, I would say I'm far more technical. Like I definitely
yeah,
am, because the problem with the news and the media is most of the time what you're getting is a great ad. You're
yeah.
getting,
And
like that's
that's my point with the analysts. With the analysts, they're not really interviewing the CEO. They're not doing
right.
that. They're giving let's be honest, it's an opinion piece.
That's all it is.
It's an opinion piece. So when you're getting it from the horse's mouth, it's like, okay, the CEO went on this interview. They've been on here for 45 minutes. I got to learn about them. You know what I mean? And then you get to make a decision based on who's leading the company.
Right. Which makes a heck of a lot of sense because if somebody tells me something and that happens, and then they say, well, this is going to come next, and then that happens, I am definitely, even me, somebody who like is built on looking at the technicals. I'm built to look at technicals. I will start listening to that person. If
Yeah.
it's starting to track, then
Yes.
then I'm
How
definitely more apt.
technicals only happen based on decisions made.
Right, right. So if his decisions are producing the results that he's telling, that he's explaining, you're right. Then, but
You're
to me,
going to
that is
be there. You're going to be there before everybody else gets there.
that's right, and that is in some ways a technical. It is
Yeah.
technical in the sense that from
Yes.
who you're just preemptively hitting that technical analysis. So you're
Yep.
able to be in before anyone else is able to be in, before the volume starts, before
Yes.
trade desks start buying, before institutions
Correct.
start buying.
Correct. Because
Hey,
remember, yeah,
that is a great point.
remember, a lot of people won't know this, but you will. When you're on a trade desk or you're on a trade floor, the goal is to get the information before everybody else get the information. Because if you get the information before everybody else get the information, you're in there you're in there at the cheapest price and before volume kicks in.
Yep. And look, there's no doubt about it. And the interesting thing is, in today's world, there, while you would think there's so many people interviewing these guys, and I don't care what publicly traded company it is. If you're on the Nasdaq, you're successful. You've already done something. And
Yeah,
I don't think there's a lot of people out there interviewing these people and thinking about it. Information is so widely available now. Like, tell me you can't. I can get the same live stream if I'm willing to pay for it as anyone else in the world. No
yeah,
one can beat me to that information. You can't beat me. So you actually, like Kenny, like as I'm listening to you, I'm going, wow, this makes a heck of a lot of sense, because there is some information you can get to before others. It's just not a lot of people are sharing it. And
yeah,
that's what you're doing with these CEOs.
yeah.
You're
And you
you're Go
correct,
ahead.
correct. And the one thing I want to elaborate on, thing you said, you got to remember technical analysis. How are technicals created? How is that candle created based on traders coming in? Traders, the really good ones that make all the money, always know there's an information coming,
Right.
because the guys who just jump in, they don't know any information, so they're a lot easier to exit out. But the guys who make 200% profit, 300% profit, because somebody told them or they figure it out. Oh, A happened, because A happened. I know B and C and D is gonna happen.
Yeah, I would say that those guys, it is an information, like they do, there is an information sort of. I mean, if you talk to anybody who's ever worked on the floor, if you talk to anybody who was trading, and I don't even care what it was, I don't care if it's commodities, stocks, bonds, whatever it was, they would always tell you they had like their headsets on and they're listening for information. They're trying to beat everybody else to the punch and they have this information flow. Now, it brings me to something interesting that I want to ask you as a previous trader, because I never worked on a floor, right? I literally started off as a financial advisor, and then I knew there was a better way. There's this asset allocation model. I go, this there's no way this is like the prevailing wisdom in real life, that I'm just going to buy everything and hope for the best. I said this
Yeah,
concept doesn't work. Although as a beginning, as a starting point, it does. But once you kind of understand that model, you got to take it somewhere else. So I literally had to learn from a laptop. So I just like started looking at charts, and then I started studying like volume spread analysis and all this kind of stuff. As someone who was formerly like on the floor, do you still think there's some sort of like information edge
oh,
that's
information is more important now than ever, and misinformation is a huge problem. And
right?
that's why it's because now a lot of it's opinion pieces.
So
Everybody got their opinion on how this company is going to play out and how everything's going to
100%.
play out. And then now it becomes more dire to hear from the source.
Ah, I could see that too. So have you seen that change then? So because there's so much talk about, I can see the machine trading. They're calling it AI trading. I'm not sure
Yeah.
that I buy into this AI concept yet, but the machine trading where these levels are being popped and being hit, you can see that all day long. I mean, it really, and they're saying that that's kind of how a
Actually,
lot of these market.
I'm gonna break it to you.
Yeah, let's
Like
have it.
all that stuff people just made up. It's impossible,
Right.
because people say, "Oh, it's AI, is this, is that." I'm gonna tell you the truth. There's no way AI can predict when somebody's going to pull out $300,000. I don't know.
See,
It's
that's the
just
thing.
there's
And
no
you heard it from the source, everybody.
yeah.
Kenny
There's
told you. There's
yeah.
the truth.
There's no
Look,
way. Yeah.
I'm
There's
with you.
absolutely no way. And all
I'm
this
with you.
stuff. Yeah. There's so
It's
many
human emotion.
variables. Yeah.
Dude,
It's
it's
so
human emotion.
many emotion. Yeah.
Oh,
It's
my
so
man.
many. It's so
My
many
man.
variables. Just to make like think about options. Think about just, I want you to, if you ever traded options, just think about options and think about it from this perspective. There is so many variables of how an option can go. You have data, fig, delta, uh you have open
Gamma,
interest, you
Vanna,
gamma
Charm.
charges, you got all this stuff, and then after that you have a million different strategies of how everybody's attacking this particular option play. You
Yeah.
know what I mean? You got a million different dates.
Yeah.
It's like impossible. And then you can narrow down the variables to like 100, and then you can be the pool in the that 100 or 1,000 that makes money. You know what I mean? Makes a profit.
Yeah.
But the game is about information and risk management.
Right.
That's really all it is.
Well,
Information and risk management.
I agree. I can tell you the only thing I can add to that, and I can tell you for sure because I know him personally, is he's an ex market maker. And by ex, I mean like I think he's still on severance. I'm not sure, but I have a good friend who's an ex market maker. He's getting out of it now. He's one of the big guys out of Chicago. And we have had so many conversations about this subject. And I can tell you in the market makers world where they're controlling all the Greeks, where they're like really they're the ones in charge of all the Greeks, all the underlying currents and all the underlying flows. He has told me that basically over there the human element is gone. That everything is just like they have to make changes and but for a while and this is he talks a lot about 2020 and how like the flash crash happened. Whereas it's funny because when you hear the mechanics behind the flash crash, it wasn't what people thought. It really was triggers from like the machines they had set up, the algorithms that they had set up to like distribute to create markets because there has to be right like the market makers they're the facilitator of us being able to place a trade, us being like access to options or access to stocks or whatever it is. And so he said that those like levels were set, it was real. And now what they're finding, I guess what's going on in the industry, look, when I say they, it's because I'm not part of it, but in the market maker industry, what they're doing now is they're trying to reintroduce the human element because of what you and I are talking about. I mean, so Kenny, which brings me to my next question for you, because I have an opinion on this. I'd love to hear your opinion. The machine trading, the algorithm trading, the AI trading, right? And you and I both agree on its real like its real usefulness. But I have been saying from the beginning, if you want to create a stock market crash, that is the best way you could possibly do it. What's
Oh,
your opinion?
100%. a hundred
Yep.
percent. Because people don't realize AI is a reactive thing, and it makes predictions based on past decisions.
Right.
So it's no different from a human, but we just have short term memory.
Right.
AI
And
does AI doesn't. But if a windfall, like for example, you take Bitcoin, it goes from 60,000 to 88,000 or 90,000. It can't predict that because that's
well, let me ask you
information.
this:
Yeah,
if it can't predict it, but do you think that, like for example, you just brought up a great example of the potential of what I'm saying. If Bitcoin goes from 68,000 to 90,000, all of a sudden we are having moves like that, right? Like we're
yeah,
having it in Tesla, we're having it in different companies. Like do you think that this machine learning so because it doesn't have short-term memory, it just basically whatever it sees, like it goes, oh, this is the trend, right? It's a robot, right? So I'm a robot.
yeah,
This is the trend. And so it just stacks, which quickly gets you from a 70 to a 90, a 68 to a 93.
yeah.
But my thing is, it'll go the other way too.
Yep, yep.
Do
It's
you
it's
think
you can't AI can't factor anomalies because you don't know what
right?
the anomaly is going to be.
Right. And it's gonna just stay on. Like if I said, okay, Kenny, here I'm gonna teach you like trading, and your whole trading philosophy, the trading philosophy I'm gonna teach you is just trend following. That's all it is. I'm gonna teach you how to follow trends because that's what I believe this stuff is anyway. The scary part is in a down market, traders and people in the know, they start to go, hey, guy, like they can feel when it slipped away from them and they know that's a real problem because what they know is how things actually work, which is off of our emotions, right? Whereas AI has no idea what it's doing because it's just told money's going down. You make money to go down more. You make money to go down. I'm a robot again. Kenny, I'm
Yeah.
a robot.
No, no. And
So what?
I completely hear you. It's it's taking away from the ability of people actually learning how to do things. And it was end up going to happen is going to come down to risk management. Is going to come down to who has the information. This is really what the world's going to come down to. It's going to come down to information, risk management, and skills.
Right.
And we are already entering a world where skills are becoming a significant problem. And the
Skills.
right
Elaborate on that. Elaborate on that,
skill
Kenny. Skills.
skills. What I mean is like, being a mechanic, plumber, or just learning how to trade, or learning how to read a report, or
Yeah.
learning how to actually go and read a 10K. You
Right.
know what I mean? Going and actually finding out real information off the company website. That's what I'm saying. People are not getting real information. They're getting opinion pieces, and they're
Yep.
running with those opinion pieces.
Yep.
And people don't understand, like, those bar charts that you see on the charts that are technical, they're based off people's decisions, and
Right.
they're based off of people's emotions. But let's take it a deeper dive. For the people that you see that, oh, the stock is falling. Why are you still in it? Why are you buying more? So, and I'll give an example. Uh, my partner Cam, business partner Cam, he got into this company called Destiny. Destiny fell $100. He got in at 75. I haven't found out who the CEO was of the company, traded company, and they went all the way down to $16. Now
Ooh.
it's back up at 45.
That's still
He,
so. Wait, he bought in at 75.
yeah, he back up at 4, but he kept buying more on the way down.
Yeah,
But
he was dollar cost.
the thing about it is, think about Facebook. Facebook IPO'd, went all the way down to $15. A
Yeah.
year and a half ago, Facebook fell below $100.
Yeah.
Now it's
I
five
think there's
something.
I think there's probably some splits in there with Facebook, but I remember the
Yeah,
day that Facebook IPO came out. I remember it. I was
yeah,
at my very, very first financial advising job at AG Edwards, regional firm like Edward Jones, right? I remember when Facebook came out, and I can't remember, it came out at 45 or 50 or something, but it didn't even try. Like, you know how normal IPO,
yeah,
Kenny will
yeah.
give you a move,
Sure,
and then
dude.
it'll
The
and
dip,
then it'll
yeah.
go. Facebook
It
didn't
just
even just,
it just dove. Yeah, that was it.
it just went
That was
straight
it.
down.
Straight down. But my point is like, is it all information?
Well, the only thing I would say to that is if you are watching the technical, so for example, in a falling stock, and this is something that I've always done, if I see a lot of volume, if the stock goes from, who cares what the number is, from 50 to 100, and I see a lot of volume coming in 100, I already know that's going to be institutional desk selling. They're going to be
Yeah,
selling. So,
correct.
so
Like
then I
that's
just sit.
one part of the story.
Right. And so what I tend to do is I just sit on my hands until I see a ton of volume step back in at much lower prices, because like if it runs from 50 to 100, it runs up 100%. You know you're getting half of that back. So you probably
Yeah,
don't even have to look again until 75. Now, what
yeah,
I like about what you're saying and what makes a heck of a lot of sense is I don't like the way, so we're living life now, all of us, whether people realize it or not, like these corporate black and white, gray, like we're losing the art of life in life anymore. We really are.
yeah,
Like now we look at the stock market, we go, what bar is big? When did desk sell? It's not even anymore about like, what are they trying to do? Are they doing something good? Are they doing something bad? Like, what are they doing? Everything is just, how do I quickly make money out of this? And I'm always talking about and I know some people dislike when I say this. I think everything at its highest form is art.
yep,
Everything at its highest form is art.
yes,
Everything, like this sounds bad, but everything at its lowest form is just business. Because all
yes.
business is a lot of people copying each other, figuring out a way to have
What
better
what is
marketing.
day trading? What is day trading?
It's just scalping, man. That's all
It's
you're
business.
doing.
It's straight. Is
Business. It's
low
business.
form. It's really low form of bad
Yeah.
investing.
Yeah.
How many day traders you know that actually makes money?
I mean, the reality of it, first off, the reality is the only day traders I know that make real money, they wouldn't even be qualified as day traders because what they do is they
That's what.
wait for 5 days a year where there's something where a price has fallen so dramatically or a price has risen so dramatically. They wait for peak events. And guess what? They plow into it and they plow right back out. They're
Yep.
in, they're out. I know guys that make money. They only trade on options expiration every month, the third Friday of every month. That's all they do. And it's because they know where price is pinned. They know where price is pinned because they understand market makers and flows. They go, that's where the price is pinned. So all
And
day,
think about it, and that's all due to information.
that's right. It is. But the only thing about that and what I like about what you're saying, Kenny, is you're actually taking it back to the like quote unquote art form. Because if you're going to the source and you're learning about the company, and I used to preach this all the time. Most of my investments, most of what I do when I invest is based on things that I believe in, not in a stupid way.
Yeah. But I know
Right,
what you mean.
you
I
know?
know what you mean.
And so it sounds like that's what you're doing. Correct me if I'm wrong, but it sounds like that's what you're doing.
Yeah, because technical analyst is just really just an entry point and an exit. When to get in, when to get out. That's
Yep.
really what it is. And it is the chart going up. But people are missing majority of the story. Because if you know the plans of the company and the CEO speaking, you said like, oh, this is coming out. We got this coming out. We got this coming out. And a lot of companies can't do that type of marketing. They can't do an Apple where they go, oh, product day,
Right.
list of stuff coming out, list of it. They can't do that. They don't have the money. A lot of these companies and then that's how people miss out. A lot of people miss out for that reason.
Right.
A
So let me
lot of
ask
people
you,
miss out for that reason.
your listeners, when you're talking with these CEOs, when you're talking with all these guys, what kind of information like you mentioned risk management and you mentioned information. So what type of risk management are they looking for from you? What type of information from the management are they looking for? Like your typical listener,
I
Kenny.
like so the last company we talked about when product's going to be on the shelf. Like, when are you going to get the actual pipeline drug on the shelf? We talked about what clinical stage you guys at, the funds they raise. You know what I mean? What people are they bringing in to speed up the process? What grants are they getting? How they're getting their money? And when they do borrow money, what interest rate are they getting that money at? 2, 3%, stuff like that. Stuff that actually matters to the company. Because if you're telling me, oh, in 2 years drugs will be on the shelf, that gives people an idea. Say, okay, he's saying 2 years.
Right.
The price of the stock is, $1, $2, $3, $5. If this is coming out in 2 years, man, people is gonna start flooding in.
Right. So how is that information used like from a risk management perspective? Like give me an idea like how can someone use that information like to manage the risk of their portfolio?
You scaling in slowly. You scale in slowly. You know what I mean? You wait until certain accomplishments that they said that's gonna happen. Once you see the first 2 or 3 accomplishments happening, it's a snowball effect.
Right.
It's
Right,
a
right, right.
snowball
I
effect.
get you. So the risk management in itself is just basically like as they're listening to your interview, they're going to outline these CEOs are going to outline step one will lead to step two to step three. The risk management is once you see step one followed up by step two, you now have a better idea that this person knows what they're talking about. Step one accomplished. He goes to step two. So now that's accomplished. So that would be the risk management. Am I right? Like
Yeah.
they can assume if this guy's on track or girl, person.
Yeah.
We're,
Yeah.
we're very we're very
Yeah.
PC today. Um,
Yeah. No, I
so
got
they
you. I got you.
what's funny, man,
Yeah.
when you work out of LA, you you get used to doing that. Kenny, you're out of New York. You don't care about anyone.
No. Yeah. No, that's true. That's
Me, I
true.
have to watch every word I say. You.
No, but like just like it it's about listening to the interview, listening what they have, because that's why I said, what do you have planned for 2025? What do you have planned for the next 2 years? You know what I mean?
Right.
What's going on now? Like, what are you doing now? What are you accomplishing now? And what are your plan to accomplish? Once you hear those stuff, that tells you, okay, you know what? 2025 halfway through, things are not happening. It kind of gives you an idea to like, all right, let me pull back.
Yeah.
Let me not invest anymore. Because sometimes the chart might tell you late.
It
Because
will. Well, it can.
information
Yeah, it can be
only
dead
comes to,
wrong.
yeah, the info, you could be dead wrong. Because like, remember, okay, let's take super microcomputers, right? If somebody told you 3 days before that the auditors of super microcomputers were going to the auditors was going to quit EY 3-4 days before, the chart's not going to tell you that.
Well, that's the dude. You bring up an interesting point. So the interesting point about that particular company was a chart can't tell you what is going to happen. And what's interesting about that particular company, and if you go back, I've talked about them several times throughout the year this year. What was interesting about that company was I didn't know what was coming. I just saw. So here's the funny thing about information. I was asking you the value of information, and you just answered the question with this one company. I saw people exiting that thing in a big way. They have been piling out. And a lot of times, like we talked about this the other day with when it comes to Tesla, and right now it's going on with Nvidia, where they kind of go parabolic and they always retrace from wherever they took off from, right? So price always retraces where it took off from. I didn't know, I had no idea that semiconductor company had like a true internal, they were lying. They're
Yeah,
lying. Did you see that they came out and said that we're not going to meet the deadlines? They're going to be delisted. Did you see that?
yeah, yeah,
Yeah, they admitted, they're like, yeah, we're not going to meet your deadline. We're going to be delisted, whatever. The funny thing about information was people knew that this was coming. I can tell you from a chart that people knew this was coming because all you can see on a chart is like, and I always talk about the footprint, the footprint, the footprint. It's the footprint of big money, the footprint of a big desk, right? And the way I always explain it is really simple. It's like, Kenny, if you place a trade and you're just you, right? And you're a professional trader, so you do well for yourself. And for you, you're putting in a big trade. But if you put in a trade and JP Morgan's desk puts in a trade, I can tell you who's who. I don't need
yeah,
you don't
yeah. You
nobody
do.
has to put their name on that, right? Like,
No, no, you don't.
oh,
You don't.
look, 100 blocks just traded. Oh, look, 100, 90,000 shares just traded. I know who's who. The people with all the money, just normal human, right?
Yeah,
And it's like, it's not
yeah,
even a knock. It's just the people with all the money, normal human. And if the people with all the money start to pull out of something big, and this was what was interesting about that company, if they try to pull out of something big, I can see that's happening, but I never have any idea what it is. I remember, Kenny, you were around in were you around in 08 and 09? Were you part of that crash scenario? Were you in the markets already?
no. I was still in high
You
school. I'm still in high school.
Good for you, bro. Good for
I'm still in
you.
high school,
Yeah,
but
you
I
said,
know about
yeah.
it. I know
Listen,
about
boomer. I wasn't around, son.
it.
Well, I was around, and I got to tell you that these signs show up in the technicals because they do get the information first. That's what I love. Well, so I love your podcast because you're an amazing host, and it's always fun, like just rapping with you.
Yeah,
But I also like when I saw the interviews that you were doing, and I saw how you interviewed me. I thought, see, I was never a person that had the inside track to know what was happening. I just had to learn, hey, when that shows up, this tends to happen. When that shows up, this, and then next thing you know, once it repeats itself for 5 years, you start to believe it.
yeah.
And so in the '07, for example, a lot of people act like that was some sort of surprise, which is absolutely
It,
ridiculous.
it really wasn't.
No,
It was actually showing a year and a half before. If you do the
right.
research, it's like, okay, let's just, like, that's why I say Michael Barry, right?
Yep.
He did the research. He was like, wait, how are these people getting all these mortgage loans?
Right.
Wait, then just break it down. And that's what I'm saying. That's what I'm saying. People are not reading the 10Ks. People are not going to the company website and reading it and say, wait, they're missing a filing here. Red flag. You
Right.
don't, and the problem is the chart is so late to realize the red flag that that like by the time it's like two filings are already missing. By the time
Right.
the chart actually comes to, even though people are putting it out there in the information, but two filings are missing. And then the thing about it is, it's like you said, it's boring.
It's boring, dude. That's the real issue. Everybody now is like first off, everything now is like right now is right now. 5 minutes from now is dead. So that's the
Yes.
first. That's like the first problem. But then the second problem is anything. I mean, dude, I'm watching things that take no effort to do, very little effort to do, like a thing like Excel. How to use an Excel spreadsheet.
Yeah.
I'm not telling you there aren't a million equations. There are, but to learn the basics, you can do it in an hour. People are buying apps. They don't even realize that it's just Excel.
Yeah.
Dude, it's just if you spend 1 hour, you can save $20 a month, but some app is going to do it for you. But guess what? You just lost. You lost brain power. You lost the
Yeah.
ability to think. I think
Yeah.
that's why I think that's critical thinking is truly going out the window. And the more you rely on these like screens and to tell you
And,
everything,
and
the
I hate to
worse it's
say
going to
it.
get.
I hate to say it. That's why like podcasts like this are popular, because people want to be fed the information in an exciting way.
Right. No, hey, listen, I guess I shouldn't hate on it, huh?
Yeah, you can't hate on it. You know what I mean? We make money off of it. We can't really
That's what
hate
I'm
on it.
saying.
But
I shouldn't
it's
hate.
just like that's what we really got to do here. It's like, all right, I'm gonna go out and get the information for you, and I'm gonna be
Yeah.
able to tell you in an exciting way the information, and I'm
Yeah.
gonna get the CEOs on here, and after
Yeah.
that, you can make a better informed decision. You know what I mean?
Right.
I'll do the work for you. I'll make it convenient, and
Right. Hey, dude, I
that's
love
it.
it.
I'll
Hey,
do
I
the work
love it.
for you. And then the
So let
goal is to get the information before the and then I'm gonna teach you the technicals on the side. Then you know how to put both of them together. There's a reason why Warren Buffett is good at what he does. Because
right.
all of it's fundamental, and people's like, oh, fundamental. No, it's all about the technicals. You're so wrong and so off.
Yep.
It's all about the fundamentals, then is the technicals. Because once you know the company in and out, you will know the information come, and then you're gonna say, okay, people are starting to sell here. All right, the volume's ticking up. Oh, okay, the average volume is 5% every day. Wait, the volume is now 7%. So
Right.
that's it.
Right.
You
So
know because yeah,
I love where you're headed with this because when you brought up Warren Buffett, something that a lot of people don't realize is that right now he's holding more cash than he has ever held in the history of Berkshire Hathaway, and
yeah,
people think that's kind of a coincidence. I looked up; he bought into a couple of fast food chains. This last quarter, I saw that it came out. I took a
and
screenshot of it yesterday. Let me.
you want to know why? You want to know
Uh,
why?
I would love to know.
Yeah, food is getting to be a problem.
Right. So
Food is
you think
actually food is becoming more expensive and more becoming more of a problem. So what is
Domino's
what
Pizza and Pool Corporation. Not to
correct?
interrupt, but that's what he just bought. If for
Yeah,
anybody out there listening, Warren Buffett just bought a ton
w-
of Domino's.
yeah. So the reason why it's buying it, what's one thing that's making food prices go up right now that everybody finds convenient to use?
I mean, they're saying inflation right now. That's
You're
like
saying
the
inflation, but before the whole inflation, what is one thing everybody used during the pandemic that made food prices go up?
everybody used. I don't know.
DoorDash, Uber Eats, delivery apps.
Oh, those stupid services that I knock all the time. I can't imagine why someone would ever spend $30 to have some guy bring them their
Food,
pizza
right?
or their
That
sushi.
costs
That's
$10,
crazy.
right?
That's crazy. That the whole
But
I never understood that.
remember, let's go back to what we said in the beginning. Let's go back to what we said like 3 minutes ago. What is people's biggest problem? They don't like to be inconvenienced. Reading
Right.
a 10K, spending to read 20, 30, 40 pages of a boring document is inconvenient.
Yeah. So no,
Going
I
to
get
pick
it.
up going to pick up my food and saving $20 is inconvenient.
It's a fact. For me. I just the way I'm raised. I'm from Pittsburgh, Pennsylvania originally. I've lived out west now for 25 years. I don't care. Like you could give me I could have Jeff Bezos money, Elon Musk money. You could combine all their money and put it in my bank account. I promise you, I am not going to call some restaurant that's 15 feet down the road or a 5-minute drive and say, "Yeah, I'll spend $30 more for your food just so you bring." I'm going to get it. Now, there
Yeah.
are caveats to that. Like in LA, sometimes things are really spread out. And if you have a busy day, that's different.
Yeah, it's
Because
different. But
that's different.
people are you don't understand. I live in New York, so people are like grocery stores like you open the window, you see the grocery store.
They don't go.
They don't go.
That's crazy, man. This is, yeah, it's funny. The world has definitely gone that way. And Kenny, look, I know we're getting to the 45-minute mark here, and you said something that I just want you to elaborate on because I want to hear about. We talked about how you could see the '07, you could see in '07 that '08 was coming, right? Like fundamentally, everybody knew what was built. You are right now interviewing CEOs of publicly traded companies. Are they saying anything right now? Because the talk out there on the street is that something big is coming, that we have a major fundamental issue. Are you, in your interviews, are you seeing any of that? Are they talking about that, these CEOs?
There's probably a big giant wealth transfer that's going to happen. There's
And
going to be a big, yes, you're going to see, you probably noticed it in 2020. A lot more people are able to get into the stock market a lot quicker.
Yeah.
A lot easier. The barrier of entry is extremely low now. So it means that information and risk management is going to be key.
Right.
But you can get out of a company a lot quicker.
Get out of everything a lot quicker. So it's faster. It's definitely faster.
Emotion is going to be a lot to play. I think a lot of it is going to come down to who's going to seize the opportunity.
Okay.
And who's going to have the right information? Who's going to be in the right spot?
I completely agree. All right, cool. Hey, you heard it from the source, everybody. I'm going to throw up the Marathon Money podcast yet again. There's a QR code. Go check it out. My interview is on there from yesterday. There's a lot of interviews on there. Kenny is a great interviewer. I can tell you. We talk all the time. It's not even an interview, man. We just get on here and start talking. And we could just probably go for 3 hours if we felt like it. So check out his interviews. They're listen, I've done them myself. They're amazing. I'm certain that they're a wealth of information. And sometimes, guys, like I talk a lot about my work as a financial advisor, and I talk a lot about the markets. And let me tell you something. When you can hear something straight from the source, and that person is giving you direct information on the company, there's no better thing to be listening to. I think we covered that quite a bit today. Kenny, thank you so much for coming on, bro.
Man, and appreciate it.
Hey, you got it. This is Derek Miller with DerekInvests. This is the market mentality, and I will see you all soon. Remember, every day above ground's a good day.